So we're going to talk about, oh, you can, sorry. All right, we're going to be talking about the history of banking, barriers, and the importance of choosing wisely. All right, first I want to talk about the types of financial institutions. So we have commercial banks, which are Wells Fargo, Bank of America, Chase, and others. And these type of financial institutions you will see pretty much anywhere all over our nation because they are large and they have branches in pretty much every single state. And then you have credit unions, which are local banks. So there's Excite, Santa Clara Federal, Mirror West, Star One, and there's many others right here in our valley. And you will not find the same Excite Credit Union in Nevada or in Atlanta because they're locally based, unless they just so happen to have the same name. And then lastly, you have internet banks, which are becoming more and more popular. And internet banks do not have any branches, so you have to conduct all of your business either online or through another access point that they may have. But some examples could be Capital One, Charles Schwab, and Discover. All right, so what is a credit union? I'm curious, does anyone know what a credit union is? I know it's on the screen, but do you bank at a credit union? Do you bank at a commercial bank? Because I, just being honest, I didn't know what a credit union was until I started working for one. So I'm curious to know your experience.
Feel free to also put in the chat, commercial bank.
Commercial bank. Yeah. Okay. Well, thank you. So a credit union is a not-for-profit. So that means, whatever excess money we make after our expenses are paid, it goes back into the community. And that is in the form of low or no fees on our accounts, higher interest on like savings accounts and certificate of deposits, and lower loan rates on cars and mortgages. So those are just some of the ways we give back to the community. And then also when you become a member, that means you're also part owner of the credit union. So if something were to happen, then all the funds will be distributed among members. So that is the exact opposite of a commercial bank, which is actually controlled by shareholders, and they are for-profit corporations. And we can move forward, Daisy. All right, so whether you go into a commercial bank or you go into a credit union, you will see that your funds are insured. And so commercial banks are insured by the FDIC. It's a federal insurance corporation. And they are legally required to have these postings when you go into the branch. You'll see them on the counter. You'll see them on all of their paperwork. And that is to let you know that your money is going to be insured up to $250,000. So in case the bank goes under, you're still guaranteed at least that much if that's what you have in the bank. And similar, credit unions are insured by the NCUA. And again, that's the National Credit Union Administration, another government agency. And it's just to let you know that your money is protected. Now, if you go into a financial institution and you do not see FDIC, NCUA, or some other insurance placement on the windows and on their papers, you want to be very careful because that means that they don't have insurance. So if something happens, you put your money in their institution, it goes under, you're out of luck and you lose your money. So you want to make sure that your money is protected. All right. So when it comes to banking, there are two that I want to talk about today. I want to talk about the unbanked and I want to talk about the underbanked. So what does it mean to be unbanked? This means that you do not have a checking or savings account. You do not have any business with any kind of bank or financial institution. This means you most likely use cash. You cash your checks at check cashers. You use other financial services, alternative financial services, and you don't have a paper trail, meaning you probably don't have credit either. So that's one that we're going to be talking about. And then to be underbanked means that, okay, you may have a bank account, you may have a checking account, or even a prepaid debit card or something like that. But you're still accessing alternative financial services, like you get money orders, you go to pawn shops, and you use other sources for loans. And so, Daisy, are we going to show the video? Do you have it pulled up? Great. And so we're going to watch a very, this is a documentary.
Let me just,
like stitch everything.
let me wait a little bit till it loads. It's a little glitchy. Give me a couple minutes. In the meantime, does anyone have any questions before we go ahead and show the video?
Maybe you can also turn your camera off, Daisy. Maybe that will help with the bandwidth. Thank you. All right. And so this is a documentary that was actually created by American Express. It's called Spent. It's really good, actually. It's about 40 minutes long for the whole thing, but it really is insightful, and I would definitely recommend it. We're just going to watch a couple of minutes of it.
Tens of millions of Americans. If the lights are going to go out tomorrow, you need to be able to have that clear now.
I'm not exactly sure when it's going to clear, and I have to pay my bills. You go to the check casher, you get the money back minus the fee. You have that money in your hands right at that moment.
It's not an irrational choice. It's just not a productive choice, and it's a costly choice.
Underserved Americans spend the same percent of their income on fees and interest as the typical American family spends on groceries. That amounts to $89 billion a year. As a way to avoid fees, Alex and Melissa decided to live on cash.
We have cash on hand, and that's the money that we have. This is all we can spend. So when the money runs out, that's it. On payday, it's getting to places so I can get the bills paid on time. Hi, how are you? I'm good. I'm here to pay the power. So much. Yeah, not a problem.
Being unbanked is really something like having a part-time job.
I probably spend quarter tank to half gas, driving around and paying bills.
You're going to spend more money and more time doing things that people who are in the banking system take for granted and usually do for free. You go to a check casher, you're automatically having to pay somebody to get your money. Now you want to pay a bill. Well, you have a wad of cash. How are you going to pay your bill?
How you doing? I just need to put some money on this card. Money is becoming more and more digital, which means there are less places that accept cash.
You can stop it here, Daisy.
Like for the underserved, even.
Okay, there we go.
Thank you. So again, I do recommend, if you're interested, to watch the whole documentary. It's really good. But that just gives you a quick glimpse into what it's like to be unbanked. And Daisy put the link in the chat if you're interested and you want to watch it later. All right. So one of the most important things to know about banking is that, most people prefer to use cash for various reasons, but there are certain communities who are more likely to be unbanked than others. And part of that is because banking has a history of redlining as well. So what is redlining? It was used to keep neighborhoods segregated, and it was used to define an area that was deemed high risk and poor. And these are primarily where people of color lived. Therefore, they didn't have the same access to services as people in other parts of a city. There were many cities that were redlined, and San Jose was one of them. Do you have the redlining map pulled up? All right, so we'll show a quick glimpse into the redlining of San Jose. So this is what it looked like at the time. This is in the 30s. And so red basically meant that these are the bad areas. This is not where you want to go. There's people of color that live there. And anytime you have someone that is of color in a neighborhood, it's not a good neighborhood. It's not where you want to live. And then yellow represented an area that was declining. And then you have blue, which was considered still a desirable place to live. And then green was the best. And of course, San Jose and Santa Clara County has grown substantially since then, but we still have a pretty interesting history.
Alita, should I pull up the video for the redlining? Maybe play the first 2 minutes?
Yeah, if you have the bandwidth to do it, we can do that.
Okay, for sure. I will just turn my camera off so that it doesn't affect the quality. Here we go.
Okay, no problem. And we're gonna watch a quick video.
Came to Levittown and we found the model house and we walked in and we looked around and of course in the eyes of a young man who was raised in the ghetto, so to speak, it was an interesting experience, interesting lifestyle, seeing all the new modern conveniences, very fascinating.
Eugene Burnett came home with almost 1 million other Black GIs. They had fought for the country in segregated ranks. They returned hoping for equality and the American dream. For many, that dream was a new home for little money down and some of the easiest credit terms in history.
I went up to the salesman, we're interested in your home, we're interested in buying one, and what is the procedure? Is there an application to be filled out? So forth. So he looked at me, looked around, and he said to me, he says, listen, it's not me, but the owners of this development have not as yet decided to sell these homes to Negroes.
It was as though it wasn't real. You can't imagine. But for someone to come out and actually tell you that they can't sell to you, you know, I was really on an up, man, look at this house. Can you imagine having this? And then for them to tell me because of the color of my skin, I can't be a part of it.
The FHA underwriters warned that the presence of even 1 or 2 non-white families could undermine real estate values in the new suburbs. These government guidelines were widely adopted by private industry. Race had long played a role in local real estate practices. Starting in the 1930s, government officials institutionalized a national appraisal system where race was as much a factor in real estate assessment as the condition of the property. Using this scheme, federal investigators evaluated 239 cities across the country for financial risk.
So that those communities that were all white, suburban, and far away from minority areas, they received the highest rating, and that was the color green. Those communities that were all minority or in the process of changing, they got the lowest rating. and the color red. They were redlined. As a consequence, most of the mortgages went.
All right, so that's also another, another short video, but it does explain very quickly, what was happening back in those days, and if you were able to get loans through the banks, they were typically unfair. And so that really created an environment of distrust for people, mostly minorities, and that is still in existence today. And you still hear about properties being undervalued. And so it's sad, but it's important to understand the history. So we can move forward, Daisy. So now that we kind of know the history of banking, and even though it's not the best history, I still want to tell you why it's important to be in the banking system, because it does have a lot of conveniences that everyone should have. One is a checking account. So why do you want a checking account? We've seen in the video earlier that when you don't have access to a bank, that you're just driving around all day trying to pay your bills. You're also paying fees to cash your checks. And it's a lot of unnecessary work that you really don't have to do if you're in the banking system. Checking accounts allow you to have direct deposit if your work allows it. You get your money, 6 a.m. the day you're supposed to get paid. If you have a credit union, you could get paid a day earlier. So that is something that you won't have to worry about spending $10 of your check on. That can go towards your savings, that can go towards something else, right? Also, having a checking account lets you see what you're spending your money on, because you can log into online banking and you can review your purchases. It also allows you to see like, hey, something is weird here. I didn't make that purchase. Something is happening. And if you didn't make those purchases, as long as you report it within a timely manner, you can report it and you can get your money back. And that is not something that you can do with cash. If you have cash and something happens to it, it's gone. It's not traceable. So having a checking account does give you some protections. And it's the same thing with a savings account. Why do you want a savings account? Again, it gives you better access. It also is it's a safer alternative than saving in your mattress or like in a jar or somewhere else at home. Because again, if something were to happen, you hope it doesn't, but if it does, your money is not protected and it's gone. And also you can visually see the amount you're saving through online banking. You can set up automatic transfers from your checking to your savings. You can also just put it, you can also use it as a form of direct deposit. If you want $100 per check to go in, you can do that. And it's kind of out of sight, out of mind in your savings, and you don't even have to think about it, right? You don't have to even go to the bank to put money in your account. And also you can make your money work for you. So when you have saving accounts, they usually come with interest. Now, I will say when you bank at a commercial bank, the interest is not that good. It's like 0.01%. And so you have to actually have a lot of money before you can actually see some interest growing in your account. But there are other saving opportunities that you have. You can get certificate of deposits and other high yield savings accounts to make your money grow. And one of the things that I like to say about savings is that you need to go at your own pace. A lot of times we like to compare ourselves to others. We have to really understand that everyone's financial situation is unique and we need to do what we can do. So if that means, hey, I can only save $5 or $10 a week out of my paycheck, then that's what you save. Why? Because you've got bills to pay and you have other obligations that you have to take care of first. But it is so, so, so important to have a savings account. And I think that people realized it this past year when the pandemic happened. It's unexpected. People lost their jobs. They didn't have anything to fall back on. And I always recommend having 2 savings accounts if you're able to manage it. One for your long-term savings. This can be, like, oh, I want to save for a car, a down payment on something. And then one for emergencies only. So the unexpected, your tire popped or you have to get your brakes changed in your car. Having 2 savings accounts allows you to keep the money separate so you don't accidentally dip into your emergency savings, right? So I know I said a lot, but does anyone have any questions so far? You can put it in the chat. You can take yourself off mute. Feel free to ask any questions.
Why do we have to have checking savings account when the same because even in the savings account or checking, the money will be there, right? It's going to stay there, right? So do we need to have a savings account? Do we need to pay extra for the savings account?
No. So if you are really good at keeping up with your money and you're like, I don't want a savings account and you want to keep it in your checking account, you can do that. But having a savings account just makes sure that you do not touch that money. It's in a whole nother location. You can't just easily swipe your card and it's gone, right? Because savings accounts don't come with debit cards. So you can't just, swipe, and it's gone. So having it in a separate location is better for a lot of people because sometimes we just aren't paying attention. But if you are one of those people where you're like, I just want one simple account for everything, I keep track of it, I'm going to use my checking account also as my savings, then but most people don't.
Okay, thank you.
You're welcome. Any other questions? And also when you leave it in a checking account, it also doesn't have interest most of the time. So your money isn't growing. And a lot of people want their money to grow because you don't have to do anything, but just leave it there and you get interest on it.
And it get locked for a certain period of time, right, in the savings?
What was that?
The money we put in, it will be locked, right? Even if I don't want to put my money in the CDs, still that amount will be locked if I put my money in the savings account?
No. So if you put your money in a savings account, you can have access to it whenever you want. Now, there is a limit to how many transfers you can do to your checking account. It's a limit of 6. So you cannot continuously transfer like from your savings to your checking every single day. You have a limit of 6 transactions that you can do. But if you go into the branch and you're saying, hey, I want to take this out of my savings, you can do that anytime you want.
Okay, thank you.
Yeah. Any more questions? All right, you can move forward. Okay, so typically when you are trying to open up a checking or a savings account at a bank, there are some limitations, and usually you have to be 17 to 18 years old, which you may not have to worry about, but I know a lot of youth try to get bank accounts and they can't because they're too young. And usually banks will require an initial deposit of $25 or more, depending on the institution. Sometimes it's 50, sometimes it's 100. So you just want to make sure if you're interested in a bank, you can Google them first, go on their homepage and look to see what the requirements are for that particular account that you're interested in. And also when you go to the branch to open it, if for some reason you can't open it online, because I know that a lot of banks are offering online services, so you don't have to go into the branch. But if you do have to go into the branch, make sure you bring your photo ID and also proof of address, especially if it's not correct on your ID, because that will limit the back and forth that you're going to have to do. And we can move forward. But, you know, it's really, really important to make sure that you are doing some research. You know, you don't just want to go to the first bank you see, right? Because there's always exceptions. You know, if there's something particular that you're looking for example, you're looking for a certificate of deposit, a CD, you know, yeah, you probably bank with, let's say, Bank of America. So the first thing you're thinking is like, well, let me check to see what they have, right? But you want to make sure that you check other places too, because you might find something that's better or more suited for your needs. And so it's important that you shop around. At least I would say have 3 other options that you look at, because you never know what you're going to find. I know that at Excite, we have accounts that are specifically for youth. So you can be 13 years old and still get your own account without an adult. That's not something that commercial banks offer. But if you're not doing your research, there's a good chance you won't find it, right? If someone doesn't tell you. So always research. And we can move forward. So now I want to talk about barriers to banking, because they do exist. And one of the barriers can be credit. Now, I will say when you are looking to join a credit union, most credit unions will check your credit. They will do a credit pull. And if you do have derogatory credit, or you know something is going on, that could mean that they will decline you from actually opening an account. So one of the things that I would suggest is to, you know, keep up with your credit, check your reports every year, so that way you know what to expect. And then another barrier is the check systems. So if you are not familiar, so there is a reporting agency independent from the credit bureaus that monitors both checking and saving accounts. So it's nothing to do with credit. This is not going to affect your credit score or anything of that nature. This is specifically for checking and saving accounts. So say you overdraw your account and you just said, forget it, I'm not going to pay this back, I'm just going to go somewhere else. You will then be put into check systems. So that way, when you go to another financial institution, they're going to check it and they're going to see like, oh, this person has an overdrawn account at Chase. You know, that's $1,000. We don't want to, you know, give an account to this person because there's a good chance that they're going to overdraw our accounts too. So that can also hinder you from getting an account. And some other examples are even ID theft. There have been people who have been victims of identity theft and they're unable to get accounts now because everything is really messed up. Bounce checks, overdraft. If a bank involuntarily closes your account for any reason, that will also show up in check systems. So it's so important that when you go to a bank, remember that you are building a relationship with them, and just take care of your accounts, because if you don't, you'll end up in check systems and you'll be there for 5 years or until you take care of any balances that you have. Does anyone have any questions about check systems?
Is the check system same as a background check?
It's not exactly the same as a background check, no, because this is specific to checking and saving accounts. So, you know, outside of that, nothing else is going to be reported. And again, this is independent from credit as well. So your credit is not going to be factored into this either.
Okay.
Yeah, but in a way, it is a form of a background check because they want to see like, hey, well, does this person have some other stuff going on here? But it's not like, oh, we're going to hire you, so we're going to do a full background check on you. No.
Okay. Thank you.
All right. Any other questions? Okay. we can move forward. And then one of the most talked about barriers is the lack of trust. You know, you simply just do not trust the banks. You are like, no, you know, you don't do us right, so we're just not going to. You know, some communities feel like, you know, they are not fair, they're not honest or transparent, and so they just prefer to stay away and they prefer to find other resources to use. And so this is something that banks have to really rectify with, and they have to admit like, hey, we may have been wrong in the past, but we really are working on it. And I know credit unions specifically are really, really community-based. So this is something that we really care about, but we can't speak for all financial institutions, unfortunately. But I can say that we are really, really feeling the burn from just a simple lack of trust from certain communities. So we can move forward. At the end of the day, I'm just gonna say it's important to choose wisely. And it is so important that you feel empowered. You need to remember that no matter if you have $70 or $7,000, it is your money and you are going to this institution to hold your money. So if you walk in and they're not answering your questions, or they're making you feel pressured to open an account, or they're doing anything to make you feel uneasy, remember that this is your money and you can walk away. You do not have to go and open an account simply because you walk into this institution. You want to make sure that you choose an institution that they're answering your questions, they're being transparent, they're being kind, right? And if they're not, then that's not a good sign. And that's probably not a place where you want to put your money. Also, you want to be aware. So, you know, when you're opening accounts, they're handing you paper after paper after paper. And probably 99.98% of people do not read all of those documents. So it's important that you're asking those questions, get the fee schedule. You know, you want to know how much monthly maintenance fees are, or if there's a way to get around the monthly maintenance fee, how much for bounce checks and overdraft fees. Remember, you have the option of opting in or out of overdraft protection and things of that nature. All right, and with that, the presentation is done. If you have any more questions, please ask away.